We're less than 11 hours away now from the start of voting in Britain over whether to remain or leave the European Union. And it's not just the UK and the EU that are patiently or dramatically and anxiously awaiting the results, but dozens of U.S. companies with lots of exposure to Britain and the European Union have a lot on the line. In fact, Britain was the fifth largest buyer of U.S. exports, things we make and sell to other nations in 2015. Britain purchased an estimate $56 billion in goods. So just how hard will these companies be hit by tomorrow's vote? Joining me now in a Fox Business exclusive, former IMF Chief John Lipsky. International Monetary Fund, of course, helps out struggling nations, usually not first world nations. But John, thank you for joining us. It's your mind that has looked at some of these things from a different perspective. Where do you stand? Do you feel that Britain should leave or exit the European Union?
Well, I can say without any doubts, if I were a British citizen, I would be in the Remain camp to stay in the EU.
Why?
Well, there's virtual unanimity on the part of economists that a vote to leave the EU would create uncertainty that would be damaging not just to the British economy, to the European economy, and could have some negative impacts on growth even and profitability of corporations even here in the U.S., although the major impact would be on the UK and to some degree in Europe. You know, but also
yes,
the non-economic arguments seem to me very weak indeed. And taken in balance, I think it's rather important for the UK to remain.
Let's say the exit camp wins, even though that's not what you want. You know, some people say that this is almost like the traffic light system. If one traffic light suddenly and errantly goes red, it affects traffic miles and miles down the road. You know, look miles and miles down the road. Tell us what we would feel here in the U.S. and maybe what some of the less sort of foundational, stronger countries, maybe some of the third world or second world nations would feel.
Well, the principal effect would be on the UK itself, creating a lot of uncertainty about the both near-term and long-term path of trade and investment in the UK. That would slow down that economy. For U.S. corporations that sell in the UK, obviously that would be a first negative. Secondly, there's virtual unanimity that in that case the British currency is going to weaken, and that means any profits earned by U.S. corporations in the UK will be worth less in the U.S. So John, it's an unaligned negative.
Don't you think that there's a pretty amazing sort of ability for countries and other different entities to figure it out once something happens? You know, let's say that in the short term the British pound had fluctuated wildly or markets fluctuated wildly. People still want to sell their goods to every other country, and other countries want to buy those goods. So would they really impose incredibly high tariffs if Britain decides to leave the European Union? France does not want its citizens to have to pay a lot for Burberry scarves, so they wouldn't add, I mean, I'm really simplifying it, but would they really add a 9%
some French manufacturers would be
that?
Perfectly happy if that happened. But it seems to me, first of all, that they would require, since the UK's biggest trade relations are with Europe, with the EU, there would have to be a renegotiation of the terms that would induce an extended period of uncertainty. Many manufacturers that have located in the UK, such as auto manufacturing, is certainly predicated on their participation in the single market. There are lots of EU-based, continental Europe-based auto manufacturers would be happy if the access of UK-produced cars was reduced, and those kind of effects would run through the British economy. I agree with you. You wouldn't want to be too dramatic about what would happen immediately, but it would definitely be negative.
John Lipsky, former International Monetary Fund Chief, it's great to have you.